Okay, can you see my screens?
Yeah.
Okay, so on the Excel sheet for the rental income, just note that, well, let me reset this. When you're going to complete, obviously, the bar information and then the year. So in this case, we have the 2023 tax returns and 2022. Okay, 2023, 2022. So this first one here is going to be for any properties that are 2 to 4 units where the borrower lives in one of the units. Okay, so that's why it's a primary residence. And then if it was that one, you would complete the address here, and then we'll do the calculation. If you scroll down, keep going down, there's investment property. If it's this one, it's going to be any 1 to 4 unit properties that are, or actually not even any 1 to 4, it'd be any other property where the homeowner rents that property. So it can be a single family, a condo, any 2 to 4 units, any multi-units. So let's say they own an apartment complex. It could also be considered, it'd be part of this property here, or this section here. Does that make sense? Between the difference between this top section of a primary residence and as an investment property? Hello?
Okay. Mm.
Okay. So for this file, let's note that when they report the rental income on their personal tax returns, we have to get in their tax, we have to get the complete tax returns, 1. 2, we need to make sure it has the Schedule E. So remember back when we were doing the self-employed, we had to request for the Schedule C. For rental income, it's going to be a Schedule E. Okay, so now let's look for that. That's the main page. Okay, so top left corner, Schedule E, and then it's going to be the address. So this one here has A, B, C. So let's say they had 3 different properties. They'll put all 3 different properties here under A, B, and C. And as you can see, it has, we're going to follow A, B, C, A, B, C. So in this case, it's just one property. So it's under A. So it'd be, we're going to look at A, and then column A. If they had 2 properties, if we're calculating the second property, we'd look at column B. Does that make sense?
Mm.
Okay, so now we're going to put the property here. John Avenue. And then I'm going to assume that this property is the borrower's main, or not main, investment property. So I am doing it as an investment. It looks like it's a 2 unit. So now let me go back. Sorry. Okay, now here we're just going to complete this section for both years. So in order for us to use the rental income like any other, it does have to be reported minimum of 2 years. The only time that we can use the income for the rental is that's not 2 years, would be if let's say they purchased the property last year, sometime last year, right, in 2024, or yeah, let's say 2024, and we're trying to use the income, or we're trying to do the rental income, but we don't have the full 2 years, then the only way we would be able to use it is because, or the reason we would be able to use it is because they just purchased a property. So technically they haven't been able to report that income with for their taxes. But if they've purchased a property back in 2020 and they don't have the last 2 years of rental income, then we can't use that rental income. Does that make sense?
Yep.
Okay, so now I'm just going to complete this here. So the Excel sheet is very straightforward. We do need to get a few other documents other than just the tax returns, but we'll get to it at the moment. So number of months, maximum is 12 months. So we're going to look at the fair rental days here. So 365 days, that's going to be the 12 months. If this was 180 days, then we wouldn't put the 12 months. We would put the correct number of months, which would be 5, 6, 6. Oops. Okay, rents received, line 3. We're going to scroll down in our tax returns here, and our line 3 is 36,000. Line 20. line 18. Okay, lines 12 and 13. So right here, they're both blank, so we'll leave it blank. Insurance, line 9. I'm sorry, I skipped one. Line 16. Okay, 12 and 13 was blank. Line 9. Line 19, this amortization. It goes back to all the other uh, incomes. If we have any HOAs, any amortizations, we want to see the statement. Okay, so there is something here, but you always want to look at that statement. So let's look for the statement one. Statement one here, it says gardening. So if this one here had more descriptions, if it says HOA or amortization or casualty loss, then you would input that specific amount. So let's say this 1,500 was divided by 5 different items, and out of the 5 we had the HOA, which was 200. Then you would put 200 here. Does that make sense?
Yep.
Okay. Let's go back to Schedule E. Okay. Now our monthly PITIA. This is where I said that we would need more documents than just the tax return. So we need the most recent mortgage statement and the insurance and the taxes, so that way we can calculate. So this is a returning client, I believe. No, it's not. Let's see. Let me look at the email you forwarded me. Okay, let's see. No, we don't have any documents on here. Okay. Okay, so in this, so in this section here, so this section here, monthly PITI, we would need to put in their, like I said, we would need to get their mortgage statement, their tax returns, not tax returns, sorry, their insurance, and the property taxes, so that way we can input the correct PITI. So let's say the monthly mortgage for this specific property was 3,800. So now they are at a negative. Is that, you see how this one here, previously it was showing a positive, so that was positive income. But because now we're putting in how much they're paying for their mortgage, it's actually negative now. So before you give him the rental income, just ask him if he knows the PITI, if he can provide the documents. If the mortgage is impounded, then just put whatever is showing on the mortgage. If not, make sure you add mortgage, the insurance and taxes on top of the mortgage statements. Okay, so I'm gonna leave this blank here, just so that way we can kind of play around with these numbers. So now we're gonna calculate 2022. 2022. Okay, again, 365, so that's going to be your 12 months. And then just enter the numbers that we have showing. Amortization. Nope. Okay, so once we've entered this, right now, 2 years average, or 1 year for 2023, the net income, rental income, is showing as 2,072.25, which is positive income. But again, we aren't including any PITIA. For 2022, it's showing 2,122 with 25 cents. If you see line 27 here, it's the net average between both years. And this is giving us a positive of 2,097 with 25 cents. Again, we aren't including our PITIA. So let's go back to, let's say their mortgage payment is 3,800 again. and we're going to put that for both years. Both of them is showing up as negative income right now, and our overall is negative income. That makes sense. Do you have any questions?
I have.
Okay.
Okay, the first one is, shall we always use two most recent tax returns? That should be always the case.
For rental income, yes.
And
yes, always request the most recent tax returns, both years.
Okay. So, and how would we know that the number of units, let's say, not sure, but
So
if it's a multiple unit or not?
so like this one here, it's telling us it's 54, 44 through 46.
Mm.
So on the tax return, that's the address. That's how they have the address, right? Oops. Okay, that's how they have their address. That's how they reported the address. You see this 1B, it says type of property down here. It kind of gives us an explanation of what it is. So A is number two, multifamily. So we can assume that this property is at least 2 units.
Okay.
Obviously, in order to double check, you can look up the address. So if you Google 5944 John Avenue, Long Beach, California. This one only says multifamily. Let me see. Let's see if this one would show up. Okay, doesn't really give us much info either. Just says multifamily as well. But this one doesn't really, let's say, specify or ask the specific number of units that are required for us to be able to calculate the income. So in order for you to decide kind of whether it's a 2 to 4 unit as a primary, again, if you only have the tax returns, you're looking at the address from the showing on Schedule E, and you want to look at the address that they reported their tax returns. So their 1040, their main home address shows a different address than our subject property. So, which is why I said I'm going to assume that this is an investment property and not a primary home. Okay. Any other questions? Did that answer your question?
Yeah. On the Excel spreadsheet, it says here the lease agreement. So is it an alternative way in calculating or using when calculating an income aside from the tax return?
So it's not necessarily like an alternative way. Like I said earlier, we're using 2 years rental income, right? But if you don't have the 2 years, in the scenario I said, they just purchased the property, they don't have the 2 years. There isn't any way we can necessarily calculate how much rental income they're getting. So we're going to request the lease agreements to see how much they're getting so we can calculate the income. So usually they will require lease agreement and the tax returns, but when calculating the income, for the most part, you're going to want to use the income from the tax returns. And also on the Excel sheet, I think there is another. Yeah, so if they were reporting their rental income in their business and not a personal, instead of doing, obviously, 1, you need to collect the business tax returns, 2 years. And 2, instead of looking for Schedule E, you're going to look for Form AA25. And then same thing as the other one, you're going to input whatever is on the line.
Okay. Okay.
Any questions?
Yeah, last one. For impounding or to know if it's an impound or not, so shall we confirm it from the LO, especially if it's a new file, we don't have the existing file on our end?
Yeah, so you want to confirm with them that this property is, well, 1, I would ask them for the mortgage statement so that way you can review it. But if they don't have that, just ask them, hey, do you know what their monthly PITI is? Do you know if their current mortgage account is impounded? If it is, then again, just put that. If it's not, then we have to request for the insurance. Or if we're just going to go based off of, let's say they tell us, their monthly principal and interest is 2,000, and we have here on the schedule. Let me go back right here. It tells us how much monthly or yearly taxes and our insurance. You can calculate using that information. Obviously, once we have the actual documents, it's a little bit more accurate. But let's say if they're telling us 2,000 for PITI, our taxes here is 6,612. We'll divide that by 12, and our insurance, divide that by 12. Okay, so now we're going to add plus our 2,000. So our monthly PITI is 2,686. Now, if it was a condo, you need to also include your HOA. Let's say 500 for HOA. So now our PITI here would be whatever we just calculated.
Okay, so additional for condo.
Yes. You always want to make sure if the property that you're calculating income is a condo in our PITI, you always want to include the HOA fees.
HOA fee, okay. All right, so there are three documents that we need to request from the loan officer: the mortgage statement, property taxes, and insurance. But if they know the PTIA, then we should put it there. But we have to put
if they don't have those documents, but they have an estimate, you can just use their estimate, but just let them know, hey, this number is not fully verified until I get these documents.
Okay.
But you don't want to just hold on the file because they're not providing it. But if they give you a rough estimate, just if you input it and then just let them know, hey, based on the number you gave me, this is the rental income I'm calculating, but I still need these documents so we can verify the income.
Okay, cool. Thank you.
Okay.
So, yeah.
Okay.
Thank you.
That's it. You said you had this Excel sheet already, right?
Yes, I do have it.
Okay. Perfect.
Cool. Thank you.
Okay. You're welcome.
Have a great
Bye.
week. Bye.
You too.